Hello students, today I am going to take or give you a little brief about accounting. The first thing we should know that what are the things we are going to discuss in this session. The first thing about is meaning and feature of accounting, process of accounting, then its different branches of accounting, and what are the persons or what are the people or the parties interested for accounting information. The fourth one is the most important thing because only in order to provide the information to the different parties we do all this accounting. Basically, meaning of accounting. Before starting the meaning of accounting, we should know that why we are studying this accounting as a subject. Everything or every business related things should have a definitely interaction between each other. If the employees will not talk to each other, they will not ascertain that what are the problems. If the managers will not talk to the employees, managers will not ascertain the employees' problem, and the environment in the business cannot sustain. That's why the same thing applied for accounting. If you cannot find out the profits and losses of your business, you cannot run your business. Because every business main motive is profit. So in order to find out the profits and losses of the business, accounting being done. Now what is accounting? It is a process of identifying, recording, summarizing and reporting economic information to decision makers in the form of financial statements. Before understanding the full definition, we should understand the different parts of the definition. The first is identifying. Identifying is basically to find out those things which are relative to the business. Means those transactions which will affect the business. You have to find out that. Then recording. Now the second thing, when you find out that which transaction being related to the business, record it at a proper way. You cannot record thing in a way. You have to record that thing in a proper way. That's why recording comes second after identifying. Third is summarizing. Summarizing basically means the thing which can be summarized at a one place. Suppose a person having a number of business A, B, C, D and E. But in order to find out the total profit and losses from all together, what he'll do, he'll summarize all the profit at one place of the business. So summarizing is also important. The next comes reporting. Now this reporting basically means to provide the information to those persons who need to find out whether the business is going for loss or profit. And the most important person who need to find out the company's profit and losses in the decision making is the owner. The persons or the owner or shareholders of that business. So what does accounting do? It identify, record, summarize and report the economic information. Economic basically means those information which is related to the decisions for the management in the form of financial statements. These financial statements again known as the profit and loss statement for the business. But in order to find out these profit and losses, there is a proper process which has been used in the accounting. That's why accounting is known as a process. It's known as a way to find out the profit and losses of the business. Now, the two things accounting do is find out the transaction, identification of transaction and events of a specific entity. A specific entity, basically entity over here or in accounting, it always been used as a business. Now transactions. What does mean this transaction? Transaction is an exchange in which each participant receives or sacrifices value. See, in business, the transactions are only those things which have a proper value. either in the money terms or in the sacrificing terms, or you can say satisfaction terms. Like whenever you are going to sell and purchase a thing or goods of a business in exchange of money or in exchange of satisfaction or in exchange of reward, that is basically known as the transaction. Whether you are providing for charity, whether you are providing for sale, or whether you are providing for any satisfaction derived to a customer, that is known as a transaction. Because in business there can be different transactions also which is not related to the business. As an example, an owner of the business has purchased anything for his personal use. That will not be recorded as a transaction because that owner and the transaction for business both are different. So the next is an event. An event can be internal or external. Whatever the event which is related to the internally with the accounting or externally means the different mergers, and internal here means the sale and purchase of goods. That been recorded in accounting. Now, what are the features an accounting should have? The first feature is of financial character. Means, first of all, you have to find out that transaction being of financial character or not. Means related to the finance of the business. Means investment of money to another shares or purchase of shares from other business. How we define a financial character means? We can define or can take an example. Sometimes a fight can be happen between the employees or between a manager or an employee. That is not a transaction of a business. Or you can say a manager died, an employee died. Those are not the transaction because these are not of a financial character. Means anything which is related to the emotion should not be accounting into the business. Second is in terms of money. It should always be in terms of money. Means like 10,000 goods, 11,000 goods, tons, and all that to be defined in money, monetary terms like rupee, dollar, euro, any currency. It is the art of recording, right? As whenever you start an art, means you started making an art. What you are doing? You need to use certain things. You need to follow certain performer. If a mango bean you shaped in a proper format, you have to use the scale, you have to use pencil, eraser, and any other color. The same way in accounting also you have to record the things into the proper manner. And this proper manner of recording is basically known as journal, which we are going to do in further slides. Next, it is the art of classifying business transactions. What do you do in accounting? You find out whether the different things been recorded properly, but if these things are happening again and again, so you need to classify them into different categories. Like an example, if the sale being done in a business in different number of days for a month, you have to classify all the sale at one place. Because when you are recording the things on 1, 2, 3 and the different dates, this can be done on different number of dates of sale. So how to classify it? You have to classify it by recording all the sale of a month into a one transaction. That is known as ledger. The next comes, it helps in summarizing business transactions. Accounting also helps in summarizing the business transaction. You can summarize your business transaction with the help of accounting. Means those things which help you to find out the profit and loss of the business, that is summarizing in one go. Their number of sale and purchase in a year. But summarizing means that to find out at the end of the month what is the, or at the end of the year, what is the sale and purchase. So accounting this also helps in summarizing business transactions. And the last but very important thing is to analyze and interpret the result. When you have find out the profit with the help of summarizing, now the time comes to find out that whether the profit is consistent or not, whether this profit is because of sale or because of any other reason. So, in order to do this, accounting we use. You have recorded, you have classified, you summarize, and now the analyze. Now, what is the process of accounting? Process of accounting is related to its maintenance of documents itself. It is first to analyze, that is, we have done identification of transaction, then record them in a proper manner, which is known as journal, where you record day-to-day transactions. Now, after preparing journal, the third thing comes to prepare the ledger. This ledger is basically known as classification. As I've given you an example of sale, different day sales being recorded or classified into month sale by recording into the ledger format. Now, after preparing ledger, you summarize that into one place, means whatever the sales you have recorded for monthly, means January, February, March, April, and so on, that all sales being recorded for a year in the form of a trial balance. And the last not the least, preparation of financial statements, which help you to find out that how the losses or how the profits has come in every month. Whatever the month profit you got, is it consistent, and whether the profit and losses are not consistent. So this is the actual process of accounting. Now there are basically three branches of accounting. One is financial accounting, cost accounting, and management accounting. Financial accounting is only deals with the accounting of finance, which we are doing right now. Means the accounting. Simple accounting is basically the financial accounting, which helps to find out the profits and losses of the business. Cost accounting, as its name tells you itself, it is related to the cost of a product. Whatever the cost you are preparing, how to find out that cost? It is being done through cost accounting. And the last, management accounting, when you combine all the things and provide it to the management, the decision the management take on the basis of different tools of accounting, it's basically known as management accounting. But their basis will be financial and cost. You have to understand that you are doing right now financial accounting, and I'm moving forward why we are doing this accounting. Because the different parties who help in the business or who had made this business require the information. The first party itself comes the owner. Yes, owner are the people who had given their money into the business. They are not given money for losses. They had given the money for profit. So every business or owner had a right to see that how the profits going for the business. The second is are the investors. Owner cannot bring a lump sum money in his home. The investors are the people who had invested in the trust of owner that he is going to make profit of the business, and that's why they also had a right to know the profits and losses of the business. Next is the creditors. Creditors are also the very important part, because these are the people who had given you the loan, who had given you the money. So their right is fully to find out the profits and losses. Next come lenders. Lenders are basically the bank. The bank provide you the money on particular interest rate. So the bank also have full right to understand their business situation. And the next come employees. Employees are people who had to whom you have to give them the money. Employees also want to know whether which company they are working is going to pay any profit or losses or not. Next, the managers. Managers are the people who take decisions. They also had a full right to understand that whether the company will do profit in future or not. And the next is government. Government person who pay the tax. And the last is researchers. Researchers are the people who need to research for the business. That's it for today. Thank you.